Hi, good morning, all of you. So today we are learning about the continuation of cost management techniques. So today the topic, as we have discussed in last session, that we will discuss two topics today. So one of the topic is life cycle costing, and the second topic is Pareto analysis. And then we will solve some questions related to all these topics. So let me start with life cycle costing. So if you will see just in front of us, I have taken a graph. All right. So the topic is related to life cycle costing. Actually, let's first understand what is life cycle costing. So if you will see, this means that here we are talking about the entire life of what product. It could be a product. We're talking about product, or we are talking about the customer, or here we are talking about an industry. All right, so the point is that here we are talking about the life of product, customer, or industry. Now the point is that we are talking here about the entire cost which we incur over the life. Okay, entire cost which we incur over the life for a product, entire cost which we incur over the life for a customer, entire cost which we incur for a product for an industry. But if you will study this chapter, here they are not talking, they're not considering the customer or industry. Here they're just considering what? The product. They're just considering the product. So here they are just talking about the costs which we will incur over the entire life of the product. This is what we will discuss here. Okay, and the name of the topic is what? Product life cycle. This is the name of the topic. So the cost which we will incur over the entire life of the product. Now the point is that every product passes through some stages. Every product passes through some stages. Now, what does this mean? As we have just discussed that every product have a life, like we people, you and me, we all have life, right? So it is for sure that we have taken birth. We all have taken birth. We have passed through an age of growth. We all have passed through an age of growth. Then we will have to attain a stage of maturity, then old age, and then we will one day, for sure, we will die. Okay? So obviously we will die one day. So this is what the entire life, this is our life. Similarly, every product have such life. Similarly, all the product have such life. Okay, product took birth, they pass through the stage of growth, they pass through the stage of maturity, they pass through the stage of old age, and the death stage. So every product have life. But now the point is that every product have different life. Maybe possible some product have only 5 years of life. This entire life of a product is 5 years. Maybe possible for some product, the entire life of the product is 50 years. Maybe for some product, the entire life of the product is 100 years, right? Maybe for some product, the entire life of the product is, more than 100 years, 150 years. So that may differ, right? So for a product or a customer, for a person, right, our life's expectancy may vary. It may, for someone, maybe some people they live for 20 years, some people they live for 40 years, some people they live for 80 years. So our life may vary. Similarly, the life of the product may vary. All right, okay, so in the same way, the product will pass through these stages. You can see here. So we have considered what? Introduction stage, the growth stage, and the maturity stage, and The decline stage. So decline stage is also known as death stage. Introduction stage is also known as birth stage. So the product took birth, they will pass through growth, then they will pass through maturity, and they will pass through death stage. Now the point is that we will study here in this chapter that, okay, every product have a product life cycle. Now during the product life cycle, these product will pass through different stages. Under different stages, they may face different threat, they may have different strength. So under these stages, the product may have different threat, they may have different strength. So the point is that since in every stage there will be some theft, there will be some threat, there will be some strength. So the point is that in every stages, the company or the organization have to make different strategies. You have learned in chapter 1. You cannot apply same strategy everywhere. That's not possible actually. Same strategy will not work everywhere. So under different circumstances, we may have to, adopt different strategies. All right. Same strategy never works everywhere. So the point is that's why we have mentioned here also for the product and services, the same strategy will not work everywhere for a reason. Because you can see here, in every stage, the product will pass through different stages. And in different stages, the product have different type of strength, the product have different type of weakness, the product have different type of, threat. So accordingly, depending upon all these things, the company will have to make the strategy, right? Company will have to make strategies. Accordingly, the company will have to make strategies. All right. So if you will see here, let me just show something first, then we will discuss. So if you will see here, this is what a product life cycle. I'll explain you everything in detail. All right. And if you will see here, what do we have? Give me 1 minute. So you will see these are the characteristics under different stages. What are the characteristics of the product? And if you will see here, what do we have here? Under different stages, what are the strategies company has to follow? So as I just told you that under different stages, product have passed through these stages, and the product have various threat and weakness and strength over these stages. Here they have different threat and weakness and so because they will face different threat, they have different strength. So because of that, the company will have to make different strategies. You can see here they have different strategies. Here the strategy is different. Here the strategy is different, and here the strategies are different. They're not same. So you cannot apply the same strategy everywhere. Under different circumstances, we have to apply different strategies. So now let's try to understand these different circumstances here. All right. So you can see here, the product will have to pass through different circumstances. All right. Yeah, I hope it's clear. Okay. So and during this entire life cycle, what we will talk about the threat, we will talk about the weakness and the strength. So we will talk about the strategies, and we will talk here about during entire life cycle, what will be the sale of the company? During entire life cycle of the product, what will be the cost for the company? What will be the profit for the company? As if you remember in last session, we have discussed something for this. Actually, if you remember in last session, we have discussed that companies 80% cost. If you will see, company will have a cost, right? If the company have sale, if the company have profit, obviously the company have cost also, right? So we have discussed in last session that 80% cost will be committed here during designing stage or introduction stage. Company will incur most of their cost here for the product. We have learned this in last session. In designing stage, or when you are designing the entire process for the production, company will have to incur most of their cost here. So most of the best strategies is required to be applied here. And you know what, in India, like if you will see in India, people do not prefer to have a business. We do not have business skills in India, like except Gujaratis, right? So if you know people, if they are qualified, they will prefer to have a job. Even I remember when I qualified my CA exam, only 3 people from my session, they were interested in, pursuing some profession or a business. Rest of them, they were all interested in job. So the point is that why people don't prefer to go in business, right? So the point is that most of the business fail in this stage because they do not know the business, right? They don't understand the life cycle of the product. They don't know that they will not incur the profit over entire life. So this is the stage, initial stage or introduction stage is the stage where most of the business fail in India. Most of the business fail here because, most of the cost you have spent here. And obviously the sale is not good here. You can see here the graph, right? Sale is not good here. You have incurred most of the cost here. Sale is not good here. And obviously you are having losses. And since initially you have just started the business and you're incurring the losses, and for that reason you want to quit because you have decided, okay, there will be no profit here in this business. But actually they do not understand that business have a life, right? Business have a life. Every business have to go through these stages. And initially every business will have some losses. Initially every business will have to incur huge cost. You can see here. Initially, the company will have to incur huge costs. You can see here the cost the company is incurring here. Right? Okay, now let's discuss the strategies. Okay, one more thing. So you can see here, initially the cost is very high. See, this is the introduction stage, no? You can see the cost is very high. In initial stage or introduction stage, the cost is very high and the revenue is very less. This is the revenue, right? Revenue is very less. So because of that, the company may have the losses in the initial stages. Now the point is that every business will have this losses. Even Jio company, Jio, now they have almost created monopoly in India. Even though they have created monopoly in India, but initially when they have started their business now, they have, I hope you remember, they have given everyone their Jio SIM card for free. They have given their mobile data services for 1 month, 9 months. I remember for 9 months, all free. All mobile data services was free, right? Initially, it was all free. Why? So that was the technique of market penetration. But the point is that initially the company have incurred the losses. Initial stage, 1 year maybe. Why? To penetrate the market, obviously. But initially, obviously, the company have incurred huge cost for spreading the optical fiber over entire India. And, for that, obviously, they have incurred huge costs. But the revenue was initially very less because they were distributing their SIM mobile data for free to everyone. So obviously, their revenue was very less. Their cost was very high. And obviously, for that reason, initially, the company had losses. So the point is that I just want to tell you that no matter how big your business is today, but every business will have to pass through introduction stage. And in introduction stage, every business should have the courage, should keep the courage of facing the failure, right? So every business should have courage to face the failure because initially they will have to incur the losses. Right? So this is just a stage. It will pass on, right? And you will get a good stage later on, growth stage, maturity stage. All right. So we must try to understand these strategies, these concepts, because once you know these concepts, then you will be assured, okay, these are actually a stage. Every product will have to pass through these stage. For some business, this stage maybe for just 1 year, like in Reliance case, it was just 1 or 1.5 years. Initially, they had losses, obviously, but later on, they have incurred huge profit. So the point is that, or for some business, this initial stage is for 5 years. So for some business, the stage is small. For some business, the stage is long, but every product will have to pass through these stages. Every product will have to pass through these stages. All right. Okay. Now let's directly jump to these characteristics. Let's learn it from here because it is given in short. All right. Okay. So I'll consider these strategies and I'll consider the graph to explain you all these things. Okay. So if you will see here, this is an interesting graph. All right. Okay. So if you will see here, what do we have? The product life cycle is given here, and we have the characteristics here. All right. So first we are talking about the introduction stage. And you can see here, stage 1 is the introduction stage. This is the introduction stage, stage 1. Okay. So what will happen? Obviously, you have introduced a new product in the market. New product. A completely new product or completely a new services in the market. Can you give us some example? Like recently, if you will see, a very recent example I have. So recently, if you will see, ChatGPT is introduced, artificial intelligence or Chat GPT, right? Recently, ChatGPT have been introduced, artificial intelligence have been introduced. So these are what? These are all new product in the market. These are all new product in the market. All right. So initially when you introduce a new product in the market, like let me consider some other example. New product. So I remember in 2015, what happened in 2015, Jio introduces a new product in the market, which was a mobile data. Before that, we have never heard the name of mobile data. We never know that how it function, how it can help us. We had no idea about the mobile data. So before 2015, we have never used such facilities, right? So in 2015, Jio had first time introduced mobile data. All right. That was a new product in the market. Now the people, they do not have idea about the product. They don't know about the product. It was completely a new product in the market, right? So for that reason, first the company will have to do what? To create the awareness of the product, because people don't know about the mobile data. So first thing, the company had to do what? The company will have to create awareness. Like these days, awareness about artificial intelligence, awareness about Chat GPT. So people talk a lot about it. You can see the publication in newspaper, in news, in everywhere, in social media. So much people talks about Chat GPT and artificial intelligence, various artificial intelligence tools. People are talking so much about these topics because data modeling, business model, so many things. Blockchain. So point is that you can see these are new things in the market, so people talk about them a lot. Why? To create awareness about these products, right? Now the point is that initially we have just discussed, since the product is unknown for the customer don't know about these product, right? People are unknown for these product. They have no idea about the product. So for that reason, customer awareness is required here. All right, customer awareness is required here. And the second thing is that initially the sale will be very less. Initially, what will happen? Obviously, the low sale, right? Initially, sale will be very less. So, because your product is new, so no one knows about your product. So obviously, when people don't know about your product, obviously your sale will be less comparatively. So initially, the sale was less. And initially, the cost for the company was very high. Why? Because the company have done huge research and development on the product, or huge initial investment. Why? Okay, let me tell you about it. So before introduction of Jio in market, before introduction of Jio, Airtel, right? Airtel, Voda, Idea, they were very strong competitor in the market. Very strong competitor in the market before introduction of Jio. Now, what happened, if you remember, because I remember, so just before 2015, what happened, if there will be any festival, hmm, if for any festival they charge extra rupees for messaging, right? You remember, like if there will be, birthday or festival, we wish each other happy Independence Day, happy Diwali, happy, Dashera. So in this way, we wish our relatives through messages or through calls. है ना? So these company, they charge money for the messages, right? The charge is 1 rupee per message. This was their charge. Calling 2 rupees per minute. In this way, they charge, right? For a call of 1 minute, 2 rupees. 1 minute is equals to 2 rupees. This is how they charge. I don't know you people remember it or not, but this is how they were charging. 1 minute, 2 rupees. One message, 1 rupee. So in this way, they were charging. And when there is festival, they increase their tariff rate. Call rate will increase, message rate will increase during festival. So if it is Diwali, if it is Dashera, Independence Day, they increase the tariff rate. So this is how they were all functioning, and they had almost, very strong brand name in the market. All right. Now, what happened in case of Jio? It was a game changer, by the way. So what happened? Jio have actually, they spread an optical fiber line all across, India. So, for example, this is the map of the India. So what they have done, they have spread all across India. They have spread in this way, what? Optical fiber line. Now, what is the point of spreading optical fiber line all across India? So just because of this optical fiber line, 4G was introduced, and internet facility was become so easy, and mobile data become so easy. But the point is that, can you imagine if the company is spreading so much optical fiber line all across India, and it's a new company? Jio was a new company, Reliance was a different company, Jio is a different company, right? Earlier there was a company of Reliance, of Anil Ambani, I think, right? Jio is a company of Mukesh Ambani. So the point is that, can you imagine, for spreading this optical fiber line all across India, the company will have to incur huge cost. And initially, company has incurred a cost of 120,000 crore. Okay, maybe this figure will be wrong. I know around this figure they have invested. Initial investment was this. This was their initial investment, maybe some high or low figure, but around this figure they have invested. Can you imagine such a huge investment? And actually, after the introduction of Jio, it became huge revolution in India. Internet facilities, mobile data facilities, they have introduced through Jio, right? And now, after introduction of mobile data, you don't need to pay any amount for messages. No money for messages. No money for calling. Calling is free. I have a Jio card. I don't have to pay for calling. I don't have to pay messages. What I have to pay is only for the use of internet data. So 2 GB, 5 GB, accordingly, I have to make the payment, right? So this is how Jio have spread in India. So the point was that initially, because people have no idea about internet, that how it works in the phone, how internet works in the phone. So people have no awareness about the new product. So initially the sale was low, right? And obviously the company's cost was very high. Per customer, this cost was, can you imagine, this cost was initially very high. And initial profit was negative for a reason, because initially the company's cost was very high, and initially the company's sale was very less. So for that reason, the company was facing losses initial stages, right? And there was no competitor, let me tell you. So when Jio was introduced in the market, Jio have almost created monopoly. And I remember because since optical fiber, because other company, they do not have such optical fiber in India, like Idea. So So other company like Idea, Voda, Airtel, that time when Jio have introduces mobile data plan through internet banking, through optical fiber, in 2015 when it was introduced, these company do not have such optical fiber. And if these company wants to spread such optical fiber, they need two things. First, they need huge investment, right? As Jio have done, they need huge investment. And the second thing what they have to do was, initially their cost should be very high, right? So these company were actually not ready to do all these huge investment, because initially it required huge investment and lot of time, right? This was a very good strategy they have adopted. So huge investment was required and time required to spread the fiber, right? To spread the fiber all across, India. And yeah. So they need time to spread all these things. They need huge investment to do all these things, and Jio have already done all these things. Now the point is that Jio has become first mover. I don't know you know the meaning of this word or not. First mover, the person who has taken first movement, first mover. Jio was a first mover. Okay. And now the point was that these company, Idea, Voda, Airtel, they were huge, they were very big brand, but they were not ready to face such competition. So what happened, now Voda, Idea, they are fighting for their survival. They merged with each other and they are fighting for the survival. Though Airtel, they managed to this is the only company which managed to compete with Jio. And the point was that initially when Jio have introduces their product in this stage, introduction stage, you can see no other company have this facility of mobile data. These company were charging money for the messages. These company were charging for the calls, which is all free in case of Jio. So for that reason, initially Jio have created monopoly. Jio had monopoly initial stages. Okay? So you can see, though product awareness was initially very less, sale was very less, huge cost, there was losses Jio company was facing. Initially they have faced losses, right? But gradually, since their product was innovative, a new product in the market, a revolutionary product, I can say, they have introduces a revolutionary product in the market. For that reason, the company have gradually created monopoly. And this company, they actually went to Supreme Court also in India, that they were saying, see, they are doing predatory pricing. It is illegal. So, initially when mobile data was free for 90 days, and then again, they were planning to introduce again, Jio was again planning to introduce it for free. But since there was a case in High Court, in Supreme Court, by Idea, Voda, Airtel, these companies, because of that, Jio have to increase their prices. And actually, predatory pricing means you cannot sell your product in a price which will result in losses to your competitor. Predatory pricing is not allowed. So for that reason, later on, Jio have increased their tariff rate of mobile data, but initially it was free. I hope you all remember. So this is how Jio have introduced their product in the market. All right. Okay, one more thing I want to discuss here is about the strategies. So in this stage, when you want to introduce a product in the market, you will follow two types of market product pricing strategy. Okay, let me explain this also. Pricing strategy. So what was the pricing strategy of the company? Initially, when you want to introduce your product in the market, your pricing strategy will be first, either you can follow the market penetration strategy. Either you will follow market penetration strategy, or second, you will follow skimming pricing strategy. So now the question comes here, what is market penetration and what is skimming pricing strategy? Ab dekho, if you will see here, what Jio have done, initially Jio They sold their mobile data for free. This is what this is known as initially when the company is selling their product for free or at a very less price. What is the intention of the company? Why the company is selling their product at very less price or for free? The company's intention is to capture the entire market. See, the point is that it is not easy for a person to change their mobile number. Generally, we do not prefer to change the number because we are very comfortable with the phone numbers we have. We don't want to change it. My number is more than 10 years old, right? More than 10-year old. Point is that we don't want to change our phone number or our Gmail IDs. We want to keep it same, right? So the point is that in order to encourage the people to change their phones, the company was selling their product for free. They have sold their product for free. So this is what, or a very less price. This is what market penetration strategy, where a company wants to capture the entire market through their product or services. The company have reduced the price a lot so that it will be easy to enter the entire market and to capture the entire market, because people like to get the things for free or less cost, right? So for that reason, this was a strategy of market penetration. Right. So because initially the product was free or at less price, for that reason, this could be one of the reasons that the sale was initially very less. And what is skimming pricing strategy? Okay, let me tell you about the skimming pricing strategy also. So if, I don't know, you know about it or not, but Apple company, let me talk about Apple company. So Apple introduces their smartphone in 2005 or 7, I think. Okay, so they introduces their Apple mobile phone for the first time, smartphone, first time in the world. And they called it as a revolutionary product. Now, initially, if you remember, when Apple, they introduce their any product, they introduce it at a very high price. So if you will see, initially, iPhone was very expensive. MacBook were very expensive. iPad was very expensive. So these products were very expensive initially. But gradually what happened, gradually the price of the phone decreases. Gradually the price of the product decreases. So this is what skimming pricing strategy. So initially you're selling your product, at a high price. And later on, you're decreasing the selling price of the product. Now, why are you doing this? Decrease the selling price. So initially the price is very high so that you can recover the research and development costs initially which you have incurred. So that what you can recover initial research and development cost. So initially the price is very high so that we can recover the research and development cost. Though the company have incurred research and development costs here also, but they have not increased the price much here. Research and development cost is here also very high, but so you can see even in case of Jio also, they have incurred huge cost on initial investment, but it depends on company to company. So for example, when you know your product is very innovative, we follow skimming pricing strategy, right? When do we follow skimming pricing strategy? When you know your product is very innovative, right? You generally follow skimming pricing strategy, but you have the option to follow the market penetration when you know your product can easily capture the entire market. Everyone in the market will buy your product. When you know that it will be affordable for everyone, that they can buy your product, so instead of skimming pricing strategy, you can adopt market penetration technique. If you will see, these two strategies are completely different from each other, you know? So in case of market penetration strategy, what will happen? Initially your product will be very the price of the product will be, selling price of the product will be very less. Initially the selling price of the product will be very less. And in case of skimming pricing strategy, initially the selling price of your product will be very high. So what will happen in case of market penetration strategy? Initially the price is very less, but later on gradually you will increase the price. So like you can see, initially Jio have introduces their mobile data for free or very less price, but now they have increased their tariff rate. Now mobile data rate has increased. During these 5 years, the mobile data rate has increased. So initially the price are less, but gradually they increases the price. Gradually they increases the price. Gradually they increase the price. But in case of skimming pricing strategy, the price is very high, like Apple company's product. Initially their product price is very high. Initially their product price is very high, and gradually they decreases the selling price. So sorry. So so here gradually they increase the selling price, and here they gradually decrease the selling price in skimming pricing and market penetration technique. These are the strategies, right? Okay. I hope it is clear to all. Okay, it's all clear. If you have any doubt, you can ask me. I hope it's all clear. If you have any doubt, please ask me your doubts. Okay. So just remember these two strategies, they are all followed in initial stage, right? In case of market penetration technique, okay, market penetration technique, initially price is low, and then later on they increase the price. Okay. And when it is skimming pricing strategy, what will happen? Initially the price is high, and gradually they decrease the price. Okay, so this is the pattern they follow, and it depends upon company's own, will they will see what kind of market they will have over entire life. Like Apple always believe that they want to create a market product differentiation. The product is very different. For that reason, they want to keep the price high. And in case of Jio, they know that their product is different, but they know that other people can easily copy their product. For that reason, instead of keeping the product high, they have keep the product price less, and they captured the entire market. So it depends upon the company's product, and under different circumstances, company can follow market penetration technique or skimming pricing strategies. All right. Okay, I hope it is clear. If you have any doubt, please ask me. Okay, give me 1 minute. Let me see your doubts. Okay, so after this, what do we have? So after the introduction stage, the product will reach to what? After the introduction stage, the product will reach to growth stage. Now, what happened in case of growth stage? So you can see after the introduction stage, product will reach to what? Growth stage. Initially, the product will have monopoly. Like you remember when Jio was introduced, they had monopoly. Hmm? When Jio was introduced, only Jio was there, those who are providing mobile data services. When Apple iPhone was introduced, there was only Apple iPhone as a smartphone in the market. है ना? iPhone. So they had almost monopoly in the market. But gradually, what will happen when you have a monopoly, people will watch you. Oh, a new product. This product is earning very high profit, right? They will earn very high product. They will earn very high profit because it is a new product in the market, right? So it is very easy to sell these product in the market because of differentiation. It's a new product in the market. So because of differentiation, it is possible to increase the sale of these product in the market. So the point is that this was the mentality. It is easy to increase the sale of the price of say it is easy to increase the sale of these product in the market. Now what will happen? Other competitor will start noticing your product. They will start noticing your product. Then what will happen? They will start imitating your product and they will start introducing the same product in the market. They will try to introduce the same product in the market. So the same thing happened in case of Apple company, iPhone smartphones. So because smartphone introduced by Apple company in 2007 was a innovative product differentiation, a new product in the market. For that reason, other competitor, they start copying them. And in the market, a new product was introduced like Samsung company. So Samsung have introduces a new product in the market. All right. Samsung introduces a new product in the market. Now the point is that, can you see, actually, let me tell you some more interesting facts about Samsung. So what happens, Samsung, they have not done any research and development. They have not done any initial cost. See, initially promotion expenses was required because no one knows about Apple smartphone, geophone. Initial expenses like promotion, advertisement, marketing was required. Then research and development was required here in initial stage. But now what happened when your product become popular? Now everyone knows, oh, it's a new product in the market. Everyone knows about it, right? So the point is that other competitor will start noticing your product. They will start, oh, it's a new product. They start noticing, right? So what will happen? Like in this case, what happens? Samsung introduces their own phones in the market, smartphones. Now what happened? They have not done any research and development. Why? Because instead of research and development, Samsung, what they have done, they have taken an iPhone, they have done tear down analysis. They have just opened the iPhone and then they saw every process that how they are producing these phones. So tear down analysis, they're watching the phones, right? Then after that, they open the phone, they have done all the analysis and they observe the places where iPhone have done copyright. Right? So wherever the Apple company had a copyright, they developed their own process. And wherever there was no copyright, they imitate it as it is. Now the point is that they will do the imitation in the market for a new product, for a competitor, for the product for which the market is already exist. The other competitor will start imitating the product. They will start copying the product. All right. So they will start imitating the product or they will start copying the product. And imitation is easy. It will not require any cost. Research and development will require cost. When you want to imitate someone, it doesn't require efforts. Cheating doesn't require efforts. When you want to make your own, your own efforts, when you are putting your own efforts, it requires cost. Cheating doesn't require cost. Imitation doesn't require cost. So this is what Samsung have done. Cheating, imitation. But the point is that for that reason, they had not incurred huge cost. And for that reason, even Samsung had more better features as compared to smartphone, but the price of the Samsung was less in the market. Why Samsung phone was less expensive as compared to Apple phone for a reason. They have not done any research and development. They have not incurred any huge investment cost, right? They have just done imitation. So for imitation, they have incurred no cost, right? So initially their cost was less. For that reason, they managed to sell their product at less price. All right. So for that reason, the competitor will start noticing them. They will start introducing the same product in the market, and they will start imitating the products. Now, what will happen to old company? Even in this case, iPhone, Apple company, they have done a case against Samsung company. They have done a court case against the Samsung company. All right. In international courts, they have done a case against the Samsung company. Now, what will happen in this case? You can see. Just taken a graph. So in this stage, what will happen? There will be a steep rise in the sale. In growth stage, the sale will rise and there will be a steep rise in sale. So initially in growth stage, there will be steep rise and then gradually the sale will decrease. So you can see this is a sale graph. Initially sale graph is less here. And here the sale graph have steep rise. Steep rise. So that means for the product, innovative product, the sale will be highest in the growth stage. And not just that, the profitability will also be the high. The profitability will also be high. Let me show you on the graph. Okay, so if you will see this graph, you can see the sale is high in growth stage and the profit is also high in growth stage, right? So if you will see here, sale, there is a steep rise in sale. There is a steep rise in sale and the profit is the highest profit in the growth stage. But what is the demerit, you can say, of this stage is that competitor will start noticing you. Oh, they are earning very high profit, innovative product, new product in the market. So for that reason, what will happen? Competitor will start noticing their product. And what will happen? Though the sale is high, very high, steep rise in sale, profit is high in growth stage, but the competition will start begin here. In this stage, the competition will start begin. Okay? So you can see here. You can see in this graph also that initially the company's product will have a monopoly, but later on, gradually the competition will increase. So in growth stage, the competition has increased, right? Okay, now let's read the strategies and the characteristics of this stage, growth stage. Okay, so let's read the characteristics of the growth stage. I hope you all are understanding what I'm explaining here. All right, growth stage. So what will happen? The product will have the maximum market share in this stage, maximum sale, maximum profit in this stage, right? Sale will rapidly rising, means steep rise in sale, rapidly rising. Cost per unit will be average. Okay, it is not high. Profit will be high, rising a lot. Profit will rise a lot. Early adapter. Customer are those who are now, they are not customer aware, but they are in a stage of adapting the product. They like the product. Adopter, they start adopting the product. So the number of customer will obviously increase in this stage. And what will happen? The competitors are also growing in this market. Competitors are growing in this market. All right. All right. So the next stage is what? Maturity stage. Now, what happened in case of maturity stage? Next is what? We have the maturity stage. Right? What is maturity stage? So in case of maturity stage, growth stage strategies also. Let's discuss the strategy quickly. So they will follow the market penetration or market penetration, right? They will follow such pricing so that they can capture pricing strategy. They will change here from market penetration or skimming pricing strategy to the price which will help them to capture the market and remain competitive in the market. Maybe they will reduce the selling price of the product to remain competitive in the market, right? They will offer the extension of the product or services. They will offer more services, more better services, after sale services. They may increase the warranty of the product. They may increase the guarantee of the product. All right, why? uh, in order to retain more customer. So actually this is a stage of customer awareness, and this is the stage of customer retention. To retain the customer, company strategy is to retain the customer and increase the loyalty of the customer, right? To make the customer loyal toward the brand. So here the company will try to retain the customer and to increase the brand loyalty. All right. Next, what happened? Build awareness and interest in mass market. So the company will try to build awareness. Though you can see in this stage also the marketing strategies, marketing expense was very high. Initial promotional expenses was very high. But here in this stage also the company will do the marketing so that, because the other competitor, they start entering in the market, है ना? So what will happen to gain the first mover advantage and to remain competitive in the market? They will keep advertising their product, right? So they will keep building the brand awareness and, to keep capturing the market. Then the company will try to develop an intensive distribution network. So distribution network means a network through which the company will distribute their product over entire India. So the point is that if you will see, like, let me give you an example of Parle G company or Bisleri bottles. So what happened in case of Bisleri? So Bisleri company have owned their own trucks, fleets, and Bisleri, they distribute their water bottles all across India through their own trucks and fleet. They have excellent distribution network. All right. So Bisleri is an example. Then what else? Bisleri is an example. Parle G, and Parle also have a very good. Parle and Bisleri, by the way, it is from the same company. I mean, they actually originated from the same company. So Parle also have a very good distribution network. You can see, even if you will go in a rural area, you will find Parle G. You will go in anywhere in India, small villages, urban cities, metropolitan cities, everywhere you will find Parle G. Means that distribution network is very strong. Okay. So here in this stage, what the company will try to do, they will try to build what? Intense distribution network. And the company will reduce to take the advantage of heavy consumer demand. Okay. So this was all about the growth stage. Now the next is what? Maturity stage. Next is what? Maturity stage. Now what is maturity stage? So after this, what will happen? Gradually the competition is start. It will start from the growth stage. Other competitor will start noticing your product, and the competition will begin here. Now the point is that if the product will reach to maturity stage, competition will be intense here. Intense, huge competition. So the competition will be intense in this stage, right? This is what maturity stage. Since the competition is intense here, competitors are fighting with each other for selling their product. Intense competition. So what will happen, since there will be intense competition and the competitor, they're fighting with each other to sell their product, gradually the sale will decrease. So you can see here, there is a steep rise in sale, but here sale has become almost constant. Means there is no increase in sale, a constant sale. And what you can observe, the profit is gradually declining in this stage. All right, let me show you. So in this stage, in case of maturity stage, the company will have the company's sale is actually not a steep rise, but actually it will become the maximum and gradually it will decrease. And the company's profit is almost constant. It is not increasing here in maturity stage. Neither the sale is increasing nor the profitability of the company is increasing. The company have a constant profit, constant sale. So this is what happening here in maturity stage. All right, so maturity, let's talk about the characteristics of maturity stage. So what will happen in case of maturity stage? Maximize the profit while defending the market share. So in this stage, company will again try to maximize the profit, but you know that gradually the market share of the company will reduce here because the competitor has increased here. So here the company have the highest market share, high market share. Right? Gradually, though company have the market share, but gradually it will decrease. Though here also the company have high market share, high, but at the end stage, gradually they will lose market. But abhi to constant market share, they have the high market share in growth stage. They will maintain that. Okay? But gradually it will decrease. Okay? Peak sale, the sale is the highest and it will not, there is not a steep increase in sale, but yes, whatever the sale is, that will be the highest sale for the company will not go beyond that. So the company will have the highest sale here, and the cost is less because you have already incurred research and development cost, you have already recovered research and in development cost in growth stage. So now the cost per unit will decrease and profit is high, but it is not rising. It is a constant profit here. High profit, but constant profit. Okay? And middle majority, the customer is what? They know about the brand now. Maybe they have reached to brand loyalty. So for example, now in the market, you can see so many phones, right? But some people, they like iPhone. So no matter whether the iPhone, Apple company, they are introducing more features on it or not, no matter it is expensive, but some people have brand loyalty. They love Apple phone, they love iPhones, right? Doesn't matter it has features or facility or not, they're expensive, whatever, they have brand loyalty. So in this stage, generally the customer who have the brand loyalty will keep buying the product from them, right? Okay. And obviously the competition is intense in this stage. The competition is intense in this stage. All right. Okay. Okay. Now let's see what strategy we will follow here in maturity stage. So diversify the brand. You may increase the feature of the product in order to increase the sale of the product. Price to match or beat the competitor. You will keep the price of the product in such a way so that it match the competitor or beat the competitor. They stress on the brand differentiation, right? And build more intensive distribution network in order to increase more product, in order to sell more product in the market. They will increase the distribution network. They will try to increase the distribution network and increase to encourage brand switching. Acha, dekho, now what will happen in after this stage, maturity stage, gradually the product will reach to death stage. All right, after this, the product will gradually reach to where? A death stage. So what is the example of this? Like, Kodak company, Nokia company. I hope you all know about these brands. So we have learned in first chapter also that Kodak and Nokia, they have lost their core competency. What was the core competency? When the end use of the product was finished, in the market, a new product was introduced. So instead of Kodak, in market, iPhone or a smartphone was introduced. Instead of Nokia, smartphone was introduced. Instead of Kodak, smartphone was introduced. And in smartphone, people have the camera. So now what happened? Because of that, those smartphones, the usability of Kodak was reached to death. So, even Kodak was a market leader, actually, world's market leading company. Kodak was a world's market leading company. Such a world's market leading company have their they have faced what? This company has faced worse end. They have the worst end. What? This company become bankrupt at the end. Let me give you more example. Like, I hope you all know about the Motorola company. This company is actually USA brand company. It was a big brand in US actually. Motorola was a big brand in America. Very old company. And even this company have reached to end stage. Nokia have reached to end stage. Right? Now the question comes here, how a leader reached to death. Kodak was a market leading company. Now it is bankrupt. Why? Because obviously they do not have good business strategies. So now the point is that if your product is reaching to this stage, so you should follow such strategy so that at least your brand should survive now. So the point is that when your product is reaching to this stage, you should have a good strategy over here. Okay, so what is the declining stage? The sale of the company will reduce, or sometime it will reduce to negative or zero. Sale will reduce, decrease, or sometime the sale will be zero. Sale will be zero or negative. Right? So what will happen? In this stage, the sale will decline. Right? Cost per unit is less, obviously. Since the sale will decline, obviously the profit will also decline in this stage. Right? Some laggard, obviously no one is willing to buy these products, but there are some laggard, those who will continue to buy the product. Right? Competitor will decline in this market. Right? And what will happen? It will reduce the expenditures. Right? In this stage, what will happen? You can see the sale is decreasing, profit is decreasing, number of competition has decreasing because the competitor will start leaving the market, right? And you will see shutdown of the product. Most of the company will shut down the production. They will shut down their brand, right? Gradually, right? And they will shift to new products. So they will start doing the price cutting of the product. Phase out means they will start leaving the brand, they will start leaving the production, they will close down the factory, right? Close down the segment of the product, right? So in this way, they will keep providing the product only to very loyal customer, those who still want the product, even the product have reached to death stage, right? The product is not at all profitable in this stage. Profit has reduced a lot, sale has reduced a lot in this stage. All right, so this was all about the product life cycle. Okay, so you can see every product have a life. Okay, and the product will pass through all these stages. So that means even if you have iPhone right now, one day this iPhone will reach to that stage and a new innovative product will be introduced in the market. Google have a market monopoly, right? Google have also monopoly, they are market leader. Maybe one day when artificial intelligence will come in market, maybe they will lose their core competencies. Point is that every product will reach to such stages. Every product will reach to such stages. All right. Okay. The next topic here is what a comparison of what this product life cycle with what BCG matrix. What I believe that you all know about BCG matrix. So BCG company has introduces BCG matrix, and if we are just comparing what we are comparing the product life cycle with the BCG matrix. Let me quickly tell you about the BCG matrix. So this matrix is like this. On one side, we will consider the market share. And on other side, we will consider the market growth. Right? On side, and we have this product. So this product have what? High market share. and they have high growth, high market growth. ठीक है? Okay, in this stage, this is a stage where low market share, low market growth. Right? This is a stage where high market share, but low market growth. And this is a stage where low market share, but high market growth. Now, the point is that if you will see, they have just compared the entire life cycle with this BCG matrix, right? So, introduction stage, they have relate the introduction stage of product life cycle. You can see here, product life cycle, introduction stage. So they have just created a comparison that introduction stage is equal to question mark stage. Okay, growth stage is star market, and maturity and saturation is equal to cash cow, and declining is equal to dog stage. What are these stages? So introduction stages are compared with question mark. So what is question mark? Question mark is what? Market growth is high, but market share is low. So growth is high, market is growing, but market share is low. ठीक है? Market growth is high, but market share is low. This is what your introduction stage or introduction or question mark. Right? So when the product is in introduction stage, obviously the product is growing, market is growing, but market share is less because people are not aware with your product. You know? So for that reason, they have compared the growth stage as star. Star means high market growth, high market share. So you know this is star. Star means high market growth and high market share. This is a star stage. High market growth, high market share. Maturity is what? Cash cow. Cash cow means market growth is less, but market share is high. Like Kodak company, high market share, but Kodak was gradually decreasing. The growth of Kodak camera was gradually decreasing. So that is maturity stage when the growth is less, but market share is high. This stage. This is what? Maturity stage or cash cow. Right? Dog stage means less market share. This is dog stage. Less market share, less market growth. So in this way, they have just made the comparison of this product life cycle with the BCG matrix. And then you can see they will use both the strategies, what we do in BCG matrix and what we will do here. They will use both the strategies, and accordingly, they will, make the strategies for the company. They will consider both the circumstances of BCG matrix and product life cycle, and accordingly, they will frame the strategies for the company. I hope it is all clear. If you have any doubt, please ask your doubt. Do you have any doubt? Is there any doubt? Okay. So after this, what we will do, I have a question. So we will take some questions after this, right? We have covered product life cycle here. Okay, let's read these points also quickly, and then we will take a break. Then after that, we will solve some questions, and then we will start Pareto analysis. Okay, so what is the question here? What are the characteristics of product life cycle? Product have vary life cycle. We know that the life of the product may vary, may be small, may be large, right? Passing through the cycle at varying speed. Every product will pass through these stages, and the speed of passing through these stages may vary, right? Pattern of cost, revenue, profit, we have learned it. We have learned all these things. And how it will help you? It will help you in better decision making. It will be helpful in long term decision making process, right? We have learned all these points, right? And one more thing, we have learned that most of the costs we incur in introduction stage and a designing phase. I told you that most of the costs we incur in designing phase, and for that we need value engineering in designing space. All right, so this is what we have learned. After this, let's take some questions, but before that, let's take a break. All right, after that, we will take the question. Let's take a question on life cycle costing. So let's take some question, then we will start Pareto analysis, then we will take the question for Pareto analysis, then we will take some together. I mean, the question from both the topic, we will take together, right? So let's take this question first. What do we have here? In a company, OB equipment is about to be replaced either by CF system or OF system. So the company is taking a decision related to replacing some of the equipment in the company. One of the equipment in the company, which is OB equipment, it can be replaced by these two different products. They have option, they can use these two different products, right? The finance cost is 12% a year and other estimated costs are as follows. So what is the cost for the company? Initial cost for this product, what will be the initial cost for this product? For CF and for OF, we have these two different products, right? So what is the initial cost which the company will have to pay? In case of CF, the company will have to pay 28,000. This is the initial cost, right? And for OF, it is 40,000. So if you will see, initial cost is less for CF. Initial cost is less here for CF and it is high for OF. It is high here and it is less here. All right, then what else we have? The operating expenses 24,000 per annum for CF, and for OF operating expenses this per annum. Per annum means every year you are incurring this cost. For how many years we can use this product? At least for 12 years you will use these two products, right? So here we will find total cost which we will incur on these products during their entire life. What is the life of the product here? 12 years is the life of the product, life cycle costing. So here we are considering the life of the product is 12 years. So over the entire 12 years, let's consider what will be the cost, right? So what will be the operating cost here? So the operating cost will be 24,000 into every year you are incurring this cost, right? So you have to consider the discounted value. I hope you know present value factor. Since every year you will receive this value of 24,000, you have to find its present value. So every year, first year, second year, third year, fourth year, fifth year, sixth year, up to 12th year, you are receiving some money. So we will consider their present value. So so for 12 year, the finance cost is 12%. So on the basis of that, this annuity value will be 6.14. You will multiply it with annuity value. Why are we multiplying it with the annuity value? For a reason. Why? Because we will not do this 24,000 into 12. A layman person will do this type of calculation. But since we know that the value of the money will decrease with the time, so even if we will incur a cost of 24,000, but its value will decrease in future. So for that reason, we will multiply it with 6.194. And in this case, what is it? 18,000. So we will multiply here this with 6.194. Now solve this, you will get the total life cycle cost. Okay. So we have what? 24,000 into 6.194. So 1 lakh, this value is coming as 1 lakh. 1 lakh. $656. Right. Let's see what is it coming. We have 18,000 into 6.194. So this is coming as 111,492, right? So you can see here this is what total life cycle cost. total life cycle cost. So this is the total cost which you will incur over the entire 12 year for the product. Over entire 12 year for the product, this is the total cost which you will incur. Now you can imagine it is not good to take the decision by just considering the initial cost. Because if you will just consider the initial cost, you will say, okay, the initial cost for CF is less, let's buy this product. Just by watching the initial cost, you will decide CF is good. But if you will see the total cost, so the total cost of CF is high as compared to OF. है ना? You can see the total cost of CF is high as compared to OF. So this cost is high. This is high cost. So the company should invest their money for this product, CF. I hope it is clear. The company will invest their money for this product, right? Okay. Okay, we have one more question, then we will take the next topic, Pareto analysis. So what is this topic? Light Limited willing to include life cycle costing in its costing system. Product manager defined the phase of the product as design, manufacturing, operation, end of life. So here, these are the stages of the product. What are the stages? First is what? Design. Second is what? Manufacturing. Third is what? Operation. Fourth is what? End of life. So the product is passing through these stages it is given here. All right. Can you assess the management accounting to list the type of cost that will be significantly incurred during these four phases? So in case of designing stage, see, they have just given you the answer. So in case of designing stage, we incur research and development cost, designing cost, testing cost. In case of manufacturing stage, we incur the material cost, labor cost, overhead cost, machine setup cost, inventory cost, training to labor, right? Production machine cost, maintenance cost, depreciation. These are the costs which we incur during the production. Operation means we incur the distribution cost, advertisement, marketing cost, warranty claim cost. End of life, when you want to dispose the product. So environmental cleanup cost, disposal cost, decommissioning cost. So these are the costs which we will incur over the life of the product. All right. Okay. Okay. So with this, we have completed the life cycle costing. Now let's start a new topic. So the next topic is what? Pareto analysis. See this image and interpret this image and tell me what you have interpreted from this image. What do you have interpreted from here? Yes, tell me in comment. What do you have interpreted here? Tell me. Yes, tell me. Janvi, I'll explain the same question in next session. I'll take all those questions in next session. So don't worry. All right. So the question which we have done in last session, we will do the same question in next session. So let's finish the topic which we have right now. After that, in last session, we will have enough time because we have to cover only one topic in last session. So we will have enough time to cover the questions in last session, means tomorrow. All right. Okay. So can you interpret this image? Yes. Can you interpret and write in comment what interpretation you will draw from this image? Yes, tell me. What interpretation you draw from this? %80 problem is caused by 20% of issue or matter. Okay. So actually, I use a line here: do more by doing less. Do more by doing less. So what happened? Like if you will see here, you're putting 80% of your efforts, but you're not getting the result here. No result here. While here, what happened? You have just put your 20% efforts, but you got all the result here. Point is that we should put our efforts at the place where you will get more result. So 20% of the result, 80% of the result you will get from the 20% of the efforts, right? 80% result you will get from 20% of the efforts. So do more by doing less is Pareto analysis, 80-20 rule. Now what happened? This Pareto analysis was first introduced by Wilfredo Pareto in 1896. Wilfredo Pareto was an Italian, and he observed in Italy, he observed that most of the wealth in Italy, most, you can say 80% of the wealth of the Italy, total wealth of Italy, 80% of total wealth of the Italy was owned by 20% of the people. This is something he observed, that most of the wealth was owned by few of the people. 80% wealth of the country, Italy, 80% of the wealth was owned by only 20% of the people. All right, this is something he observed, and then he gave 80-20 rules. Pareto analysis. He gave Pareto analysis. Later on, Dr. Joseph M. Jurin called the same Pareto analysis as 80-20 rule. So Pareto analysis, this name was given by Wilfredo Pareto, right? So you can see we called it Pareto analysis also. So this name was given by Wilfredo Pareto, right? And 80-20 rule, 80-20 rule, this name was given by whom? Dr. Joseph M. Jurin. All right. So later on, Dr. Joseph M. Jurin, he done some more research on this topic, and then he gave 80-20 rule. All right. Okay. What is this 80-20 rule? So 80-20 rule means put only 20% effort and get 80% of the result. This is how we study in our BCom, not in CA syllabus, okay? In CA studies, you have to study everything 100%, but this is how we have studied in our BCom. How we just see the important topic, which are more important for the exam, and we just study from them, and we get more than 80% marks in BCom. So the point is that we have put very less efforts. With less efforts, we have achieved more results. And this is known as 80-20 rules. With less efforts, you are achieving more. So we should first focus on the area which are more important to get more better result. Okay, so this is 80-20 rule. Okay, now let's understand this topic. So 20% of the customer will generate 80% of the revenue for the company. 20% supplier furnish 80% value of the supplies. 20% product generate 80% of production cost. 20% of the product generate 80% of the profit. 20% of the defects arises because of the 80% of the reasons. Point is that we should focus on these 20% to achieve 80% of the result. Do more by doing less. You're working less, but result you are achieving more, right? You are putting less efforts, but with the less efforts, you are achieving more results. With the less efforts, you're just putting 20% efforts, but with the less efforts, you're achieving more result. This is 80-20 rule. This is 80-20 rule. All right. Okay. Then what are the pros of Pareto analysis? So this Pareto analysis will help you to identify the root cause of the problem. What is the root cause of the problem for the company? It will help to identify all the root cause of the problem. And accordingly, you will prioritize. See, these 20% are more important, right? We should focus here more. So you will do the prioritization. Then what will happen? Optimum use, best possible use of the resources. And what will happen? It will help you to develop a control mechanism. Okay. So here they have taken Pareto analysis, application of Pareto analysis on these 5 products, which is useful for us during the cost management. All right, let's understand one by one. So the first one is pricing of the product. What happened? For example, if a product is selling multiple product, HUL, Hindustan Union Lever, Tata, ITC, these company, they sell their product in multiple segment, and in their specific segment, they sell multiple product. So the point is that, for example, the company is selling multiple beauty product, face cream, lotion, and body wash, face wash. All right. And winter cream, lotion, sorry, what moisturizing cream, night cream, different type of product. Point is that when the company is selling different type of the product, you will observe out of all these product, there are only few product, or you can say only 20% of these product will generate maximum profit for the company. But the company is selling so many product, conditioner, shampoo, face wash, face cream, winter cream, moisturizing cream, sunscreen. Is the company is selling so many product. But not every product is generating revenue for the company. So what is mentioned here, only out of those product, only 20% of the product will generate 80% of the total sale of the company. Maybe for the other products, sale is very less. And there are very few products for which the sale is very high. So where the product, from the product, the company have highest sale, the company should focus on those products. So from the product where the company can have the highest sale, the company should focus on those products. All right. So this is what Pareto analysis application when you want to implement it during your process of business. All right. When you want to sell your product in the market, you will observe it. Okay. Next is what? Customer profitability analysis. A company can have different type of customer. You must remember in second chapter we have learned gold customer, iron customer, platinum customer, diamond customer. So company created such kind of category for different product, for different customer, according to the profitability they are getting from them. Now see what is mentioned here. Out of the total customer you have in the market, out of the total, only 20% customer will give you the maximum profit. Not every customer will give you the profit. So out of the total customer you have in the market, out of them, only 20% customer will give you 80% of the revenue or the profit. And since they are very important because they are giving you the maximum profit, so you should focus on these 2 customers first. Focus on where you have the maximum profit. So, the company actually created such type of category for the customer. If they know these are diamond customer, they offer them discounts and they offer them good services for a reason, because they know they are premium customer, right? They're getting their maximum revenue from these customer, right? So for that reason, we will consider customer, in case of customer profitability analysis also, we consider the 80-20 rule or Pareto analysis. Okay. Next is what? Next is ABC analysis. Now, what is this ABC analysis? So in case of ABC analysis, for the inventory the company have, right? Now, since the company is selling various product, so when the company is selling various product, the company can have different category of the inventory. right? The company can have different category of the inventory. Company will consider what are the high value inventory, what are the less value inventory, what are the moderate value of the inventory. So for example, I have a jewelry shop. I have a jewelry shop, so I can have gold jewelries. I have the gold as an inventory. You know, I can have silver as an inventory. I can have platinum as an inventory. And I can have diamond as an inventory. You can imagine out of all these inventory, what is the most expensive and valuable inventory? Out of them, which one is the most important inventory? So you can imagine out of the gold, silver, platinum, the diamond is the most valuable inventory. So its quantity may be very less. Quantity will be very less, but its value will be very high. So you can say only 20% of the inventory will have 80% of the value. It is possible, na? Diamonds are very expensive. है ना? So we can say 20% of the inventory can have 80% of the value, right? So in this way, in case of inventory also, we created such category. Okay? So high value inventory, like you can consider diamond here. Moderate value inventory, you can consider gold here. Low value inventory, you can consider silver here. Silver are very cheap and you can buy more in quantity, like 60,000 per kg is the price of silver. This is the price of the silver. But what is the price of the gold? Expensive, right? So this is the difference, right? Okay. So in this way, we can create category of the inventory based on their value. And you will observe like most of the value is from very less inventory, like high value inventory. So 20% of the inventory is responsible for 80% of the value of the total inventory, right? So these are the most valuable inventory. You should focus more on this, right? Accordingly, we take the decision what we should do, right? Okay. Okay. Next is what? Activity based costing. है ना? Okay, give me 1 minute. So we have discussed this point. We have discussed this point and we have discussed this point. Now let's consider activity-based costing. So we use activity-based costing for the cost of the inventory. Where you want to find out the cost of the inventory, we use activity-based costing. So like, for example, I have 3 different product, A, B, C. My company is selling this product and my organization have overhead cost. What are the overhead costs my company is having? So for example, the rent of factory, right? Then for example, depreciation on machine. Right? For example, salary of manager. For example, canteen expenses. So what is mentioned here, 20% of the cost driver are responsible for 80% of the total cost. So cost driver, you know the basis on which we will allocate the cost. Like rent can be allocated on the basis of the area. Rent can be allocated on the basis of area. Depreciation can be allocated on the basis of machine hour. Salary on the basis of number of employee working. And canteen expenses may be on the basis of number of employee working. Now, what is mentioned that out of these total cost, out of the total cost, 80% cost of the company is driving because of one driver, one cost driver. So maybe because of this, this is the 20% out of the total 20% cost driver, and the highest cost of rent is here. High cost of factory rent is here. Out of the total cost, maybe 80% of the cost is because of the rent. Maybe. So what is mentioned here that 80% of the total cost is driving by 20% of the cost driver. 80% of the total cost is driving by 20% of the cost driver. Okay. It will be more clear when we will do the question. And the last one is what? The errors and defect in the company. Errors. So what is mentioned here that 80% problem or defect or mistakes. So 80% problem, defect, mistake happen because of 20% of the reason. Right? So 80% problem happen because of the 20% of the causes or reason. This is what uh, your Pareto analysis, right? So we have learned that error or defect in the company occurs because your organization is not well organized, process is not organized, because of which the company is incurring most of the defect in the company. So it has mentioned most of the reason, 80% of the problem in the company is arising just because of the 20% reason. Focus here and find them and remove them from the organization. If you just remove 20% thing from the organization, it will prevent 80% of the losses which the company is incurring because of the defective and mistakes, because of the defects and mistake. So this is what Pareto analysis. So this is how we have to implement Pareto analysis. Now, what we have to do, we have time. So let's do one thing. Let's take some question on Pareto analysis also. So we will take the question on both the topic. All right. Okay. This is the first question we have here. So what we have to apply here, 80-20 rule. All right. Okay. Now see here what we have to do. Aryan Vision is engaged in manufacturing of specs. The management has provided the following information about the type of defects during the production period. So when they are preparing the specs, they have different type of defects. All right. Now what is happening? Prepare the frequency table so that Pareto chart can be constructed for the defect type. Now what will happen? Give me 1 minute. We will prepare a table here. Okay, leave. Give me 1 minute, huh? So we will see the defects. What defect the company is incurring? See the highest one. Scratches on the surface. Right? Number of item. Defective item is how many units? 110. Cumulative frequency and the percentage we will find. All right. Then what we have, the next one is what? The highest next value is what? This one. Rough edges. All right, rough edges of lens is how many? Value is what? 70. ठीक है तो 7 here 110 70 plus 180. Okay, the next value is what? Third. Next highest value is what? This. Non-uniform grinding. What is the value here? It is non-uniform grinding 60. And this will be 240 total value. Then the next one is, after this, the next highest value is this one. frame color shade difference. Frame color shade difference. Okay, so frame color shade difference is what? The value is what? 25. So this will be, right. Then the next value is what? 4, 5. This value, power mismatch. Right? Power mismatch is how much? 20. Okay. So you can see we are arranging them in descending order. Okay. Okay. Power mismatch is how much? 20. So the total value will become 85. Then the next value is what? 6. Next highest value is this. End frame, not equidistance. Not equidistance. What is it? 10. 295. And the last one is what? So the last one is your spot or stain on lens. What is it? 5. So this will be 300. Now see the percentage. See the percentage. So how will you find the percentage? 110 divided by total value. You can see total value will be coming 300. If you add them, it will be coming 300. And we have taken the cumulative also. So 110 divided by 300. See the value. So 110 divided by 300. So this is what? 36.67%. All right. Next is what? 70%. 70, right? Next is what? 70 divide with 300. See what is it coming? 70 divided by 300. Okay. Just give me 1 minute. All right. Then the next one. After this, what we have? This value. Uniform grinding. 60 divided by 300. 60 divided by 300. So this will be coming 20%. Similarly, divide all the value and calculate it. All right, divide them and calculate the value. Okay, next is what? Your 25 divided by, just give me 1 minute. Let me use the calculator. Okay, give me 1 minute. Let me use the calculator. So 25 divided by 300. This is coming as 0. This is coming as 8.3%. Then your 20 divided by 300. 6.67%. Next, 10 divided by 300. 3.33%. Right? 5 divided by 300. 1.67%. Right? So in this way, we have calculated the percentage of error, all these for all these points, right? Now, since we have to see the 80-20 rule, so you can do one thing, just add these percentage, right? Add them, right? Cumulative percentage, find the cumulative percentage, right? So first value is 36.67% plus add 23.33. This will give you 60% here. And if you add 60 plus 20, it will give you 80%. So you can see here with this, you can see here, give me 1 minute. With this, you can see that most of the problem in the company, 80% problem of the company arises because of these reasons. 80% defective specs. The company is having 80% defective specs because of these reasons. These three reasons. Why these three reasons? Because you can see if you add these three value, it will be coming as 80%. It will be coming 80%. So 80% defective unit is arising. The company is incurring 80% of the defective unit just because of these three reasons. So first reason is what? Most of the error or defect in the company is happening because of scratches on the surface of specs. Then second reason of the defective unit is the rough edge of the lens. This is the second reason. And the third reason is what? Uniform grinding is the third reason, right? So this is how you have to answer, right? Okay, let me show you this in your answer. So you can see here, it is given here that 80% of the defect is happening. 80% defect is happening because of these three reasons. These are the reasons. Because of the defect in the company is happening. So you can see it is written, eliminate the scratches on the surface, rough edges of the lens, and grinding of the lens, because it is related to 80% of the error in the company. 80% error in company is because of these three reasons. That's it. All right. Okay. Next question. Okay, this is the next question. Let's read the question first. Take your time first. Take 2 minutes and read the question. Take time and read the question first. Yes, please read the question, then we will solve it. So let's do this question. So this question is what? Emergence Technology Limited developed cutting-edge innovation that are powering the next revolution in mobility and has 9 tablet smartphones model currently in the market whose previous year financial data is given. So what is happening here? The company have these 9 model of their tablets. All right. And their sale is given. So the total sale of these 9 tablet is given here, and they have given the PV ratio for these tablet. So if the PV ratio is given, we can calculate the contribution for these tablet, right? What is the question? Using the financial data, carry out the Pareto analysis 80-20 rule for the sale and the contribution, right? So you have to do the Pareto analysis or 80-20 rule. You have to apply it considering the sale of the company and considering the contribution of the company, right? So if you will see here, sale is given for these 3 different 9 product. You can see these are the 9 different product of the company. But here, since we need 2 things, first we need sale. It is already given, right? Sale is given here, but we need contribution also. So let's calculate the contribution. All right. Okay, let's do this. Let's first find the contribution. So contribution will be what? 5,100 into 3.53. Just multiply this, you will get contribution. All right. Okay, next value. Next is your 3,000 into 23%. Multiply them, you will get the contribution. Then what we have, 2,100 into 14.29% equal, you will get the contribution. Then the next value, 1,800 into 14.17 percentage, you will get the contribution, right? So in this way, first find the contribution. Next is your 1,050 into 41.43 percentage equals, you will get the contribution. Then 750 into 26 percentage, you will get the contribution. Then the next one is 450 into 26.67 percentage, we will get the contribution. Then the next one is 225 into 6.67 percentage, we will get the contribution, right? And the last one is what? 75 into 60 percentage equals, we will get the contribution. Now what we have to do, we have to do this Pareto analysis or 80-20 rule. We have to apply it on both sale as well as on contribution. So what will happen here, we have to prepare 2 different tables, right? We will prepare here 2 different tables for them. All right, so one table is for sale because we want to find it for the sale, and the one table will be for the contribution because we want to apply it for the contribution also. All right. Okay. So on one side, we will consider the sale, and on other side, we will consider the contribution. We will consider both. All right. Okay. So how we will do it? We will again prepare a table. We will consider the values and we will prepare a table. Okay. So you will see out of them, which one is the highest, which one will give you the highest sale. So you can see tablet, tab, R001 will give you the highest sale, which is 5,100. This is the highest sale we have. Find the cumulative sale, All right. Then after this, the second highest will be this one. Okay. So tab S001 will give you the second highest sale. Then tab, this one, tab T003 will give sale of third number, right? Then tab this. Then tab then tab 750, then tab 450. They're already in descending order. That's okay, because contribution is not in descending order, so we have to do it for the contribution also. Tab Y008 225, and the last one is what? Tab Z009 is 75. So this is the sale revenue in thousands. The value is in thousands. All right. So this is what the total sale value. Now let's arrange what the contribution, because we have to apply the Pareto analysis on the basis of contribution also. We have to apply this also. So consider the value of the contribution and arrange them again. Okay, so you can see here which out of them, which one is having the highest contribution. So you can see this is the tablet which have the highest contribution, right? And the second highest will be this. This will be the second highest. Then third highest will be this. Then fourth highest. Give me 1 minute. Third highest will be what? This will be the third highest. Then see the fourth highest. This is the fourth highest. Then see the fifth highest. This is the fifth highest. Then the sixth highest. This is the sixth highest. Then the seventh highest. This one is the seventh highest. Eighth highest. This one is the eighth highest. And the ninth is this. So in this way, according to the way they are decreasing, according to the way the contribution will decrease, arrange them. Right? The way we have arranged, it is already in descending order. Sale is already in descending order, but contribution is not in descending order. So we have to arrange it in descending order, right? So first, the highest contribution is what? A tablet S002 have the highest contribution. So what is the contribution value? It is 690. Then the second highest is what? Tab, this one. Tab V005 is having the second highest contribution, 435.015. After that, third highest will be what? Tab T003. T003, right? So what is it? Third is what? 300.09. Then fourth one is what? Tab U004. The fourth one is what? 255.06. Then the fifth one is what? Tab W006. Arrange them in descending order, right? So next one is what? Okay, this one, 195. Then tab fifth, sixth is R001. So this is what? 180.03. Okay. After that we have tab X007. So this is what? 120.015. And the last one is what? Tab 788. 8 is what? Tab Z009, and this is what? 45. Wait. Now we have one more. Last is tab Y008 15.0075. So what you have observed that I have arranged the contribution in, decreasing order, right? You can see I've arranged them in decreasing order, right? Okay, now what we have to do, we have to first see what is the total sale here. Cumulative sale, find the cumulative sale, see the total sale. All right. Okay, so we have to use the calculator now. We have to use the calculator and find the total sale, right? So first sale is 5100 plus 3000. All right. You can calculate the cumulative frequencies also. Like here it will be coming as 8100. Then the next one is what? Plus 2100. This will be coming as 10200. Then the next one is what? Plus 1800. This is coming as 12,000. Then the next one is 1050 plus 1050, 13,13050. Then the next one is what? 750 plus 750. This is 138000 plus 450. 14250, then plus 225, 144, then plus 75. So this will be the total sale. 14550 is the total sale of the company. Now what we have to find, we have to find the percentage here, right? Percentage of sale here. So how we will find it? 5100 divided by total value. Total value is 14550 is the total value. So this divided by this, then this divided by this divided by this. So find the percentage. Find the value in percentage. So 5100 divided by 14550, you will get 35.05%. 35.05 percentage. Second one, 3000 divided by 14550. This will give you 20.62%. Next value will be 12,000 divided by, no, I'm so sorry. This will be, give me 1 minute, 2100 divided by 14550. So, okay, 1 minute. This is the first value. We will consider these value, all right? We will consider these value for finding the percentage, this value. Third value is 14.43%. Then 1800 divided by 14550. This is coming as 12.37%. Then we have 1050 divided by 14550. This is coming as 7.22%. Next value is what? 750. 750 divided by 14550. So this is coming as 5.15%. You can see we have other product also, but their sale revenue is so less, right? And this initial product is giving so much high sale, right? The sale value is highest here and the sale value is lowest here. Let's calculate the other value also. So 450 divided by 14550. So it is coming as 3.09%. Next value, 225 divided by 14550. This is coming as 1.55%. And the last one is what? 75 divided by 14550. So this is coming as 75 divided by 14550. So this is coming as 0.515%. So if you add these value, what will you get? If you add all these percentage, it will be coming as 100%. All right. Now, if you will see here, most of the sale of the company, you will consider these values, right? Most of the sale the company is having from these product, right? 35 plus 20 will be what? 55, right? Plus 14, right? Maybe plus 12 also, right? So just add them and see whether it is coming 80% or not. Okay, let me add it. So first one is your 35. Give me 1 minute. 35.05 plus 20.62 plus 14.43 plus 12.37. So you can see 82% sales. The company is deriving 82% sale from these 4 products. So you can see the company is having most of their sale. The company is selling different model of the tablets, right? The company is selling different model of the tablets, but most of the revenue the company is deriving from these 4 products. So out of all the 9 products, the company is deriving most of their sale from these 4 tablets. Now the question comes here, does the contribution of the profit follow the same pattern? Let's see. So we have the contribution, right? So according to sale, these 4 products should be important, right? These 4 products are giving more sale to the company. They are important if you will just see the sales. Okay, now let's see the contribution, because we make the decision in the company on the basis of contribution. So let's see whether we are following the same pattern as per contribution or not. So what will happen? Again, we will find the cumulative frequency value. If you want, you can find it, or just find the total value. Find the total value, then see what is the percentage coming here. We have already arranged them in descending order, right? So obviously these first 2 products will give the highest contribution. All right. Okay, so how we will calculate it? First, add them and find the total value. All right. So what is it? 690 plus 435.015 plus 300.09 plus 255.06 plus 195 plus 180.03 plus 120.015 plus 45 plus 15.0075. So what is the total value? Total is 2235.22. This is the total value, right? Now let's see the contribution percentage, right? So 690 divided by the total value. 690 divided by 2235.22. 30.87%. 30.7%. Second value, 435.015 divided by 2235.22. So this is 19.46%. Third value, 300 divided by 2235.22. 13.42%. All right, next, 255.06 divided by 2235.22. So 11.41%. Next, 195 divided by 2235.22. So this is coming as 8.72%. Next is your 180 divided by 2235, the total value. So this is coming as 8.05%, right? This is for this. Then for this is what? 120 divided by 2235, 5.36%. Then 45 divided by 2235, 2.01%. And the last one, 15 divided by 2235, 0.67%. Right? If you add them, it will become 100%. All right. Now, if you will see, most of the contribution the company is deriving from these tablets, right? This tablet, 30 plus 40, 50, 50, 60, 70, right? So if you add them, it will be around something 70%. Let me add if you want. Add these percentage, 30.87%, 30.87 plus 19.46 plus 13.42 plus 11.41 plus 8.73. 83. Okay, so you can say 83 or 84, round off, 84%. So you will see 84% contribution is deriving from these products. These product means these tablets. And you can see actually these tablets are different from the tablet which is deriving the revenue. Means if you will see as per revenue, you will see it is good to sell these product. This product, these 4 product will give the highest revenue to the company. R01 tablet, S001 tablet, T003 tablet, and U004. These tablet will give the highest sale to the company. But if you will see the contribution, these tablet S002, V005, T003, U004, W006, these product will give the highest contribution to the company, right? So this product will give the highest sale and these product will give the highest contribution to the company. Accordingly, we will take the decisions, right? On the basis of sales and contribution, we will see which one is more profitable. If you will ask me, I'll say I'll want to sell these products because these products will give me the most contribution. I'm more worried about the contribution. I'm more worried about earning the profits for the company. All right. So as per sale, it is good to focus on these 4 products. As per contribution, it is good to focus on these 4 products. So this is how we will take the decision for the company. I hope it is clear. If you have any doubt, please ask your doubt in Q&A. Do you have any doubt? Please ask your doubt. Yes. Very nice, Janvi. Any student have doubt? Do you have any doubt? See, you can do this question without even cumulative values. I have done without cumulative value. So in one case, I have done this with the cumulative value, and in other case, I have done without cumulative value. You can do it without cumulative values. There is no use of cumulative value, by the way, if you will see it. So you can do it without cumulative values also. Just see the total values and the respective values. But yes, arrange them in descending order. This is important, right? If you are calculating it, first arrange them in descending order. That's it. All right. So we have done this question. Now let's do some more questions. We have half an hour left. Okay. So you can see here it is mentioned that according to sale, the company should focus on these 4 products, as we have done the question, right? According to sale, the company will have to focus on these products. And according to the Okay. According to contribution, the company will have to focus on other product. And for example, if the company wants to remove some product from the company, if someone is asking, okay, tell me which product is not profitable and remove them from the organization. So I will say, if you will see here, give me 1 minute. So if you will see here, this product, which one? Y008. And Y008. So this product is neither giving the contribution to the company, and this product is neither giving the sale to the company. It is not good product. You can remove it from the organization. This is neither giving the profit to the company nor giving contribution to the company. Similarly, Z009. This product, neither this product is giving sale to the company nor this product is giving contribution to the company. Similarly, this product, neither this product is giving sale to the company nor this product is giving contribution to the company. So in this way, you can identify these 3 products and you can say these products are neither giving the sale nor it is giving the contribution. Better remove them from the company. So in this way, we can take such decision also on which product the company should focus all their resources, and the company can identify the product from where the company should remove, their resources. So in this way, we can take the decision for the company. All right. Okay, so this is our Pareto analysis. Pareto analysis help us to take decision for the company also, right? So Pareto analysis will tell you which product will be more profitable, which product will give you more sale, right? Focus on those products, and the product which will give you less profit and less sale, just remove your resources from there. Okay, so in this way, we can take decision for the company. Okay, let's do more questions. Give me 1 minute. So I have the other topic also. Topic of what? Life cycle costing. So let's do a question on life cycle costing also. This is a question of life cycle costing. Let's do one complete question of life cycle costing also. What is the question? Fossil Limited make fashionable high quality digital watches. Company is producing digital watches here, right? Fossil Limited now is preparing product life cycle budget. So the company is preparing what product life cycle budget here for a new watch, right? Company is preparing product life cycle budget. Development of the new watch is to, these are what? Digital watches. Now what is happening? You have to find out the life cycle cost of this watch. Life cycle costing. Okay, so what is given? How many unit the company will sell? What is the selling price per unit? So this will give the total sale. This will give you what? Total sale value. Then what we have? Research and development cost. Okay, then we have what? Manufacturing cost. So we have the variable cost, we have the fixed cost, manufacturing cost, we will consider it here. Then we have the marketing cost, we will consider it here. We have the distribution cost, we will consider here. So sale minus all the costs will give you the profit over the life of the product, right? So calculate the budget life cycle operating income. They're asking you to find out the operating income over the budgeted life cycle. Now, the point is that for that, what you have to consider the total sale over the entire life of the product, total cost over the entire life of the product, and the profitability from the product over the entire life of the product. This is what we have to do. We do it here. All right. Okay, let's do this question. First, we will see what is the total sale here for the company. So parallelly, I'm doing it. So first, we will see what is the total sale. How we will find the sale, total sale, 240 units into 500. This will give you total sale. All right. Okay, less. What do we have to consider? Research and development and designing cost. Right? We have to consider this. What is it? Straight, it is given what? 80 lakh. This is research and development and designing cost for the company. Next is what? We have considered this. All right. Next is variable cost, manufacturing variable cost, less. So what is manufacturing variable cost here? So 120 per unit. We have 2,40,000 units. And the cost per unit is what? 120. Right? This will be the variable manufacturing cost. We will calculate it later. Okay, less. What do we have? Variable cost per batch. Watches per batch is 300. So you can see the company have total how many units? 2,40,000 units. These are the watches, right? These are the total watches the company have. And in one batch, the company will have how many watches? 300 watches. So this will give the number of batches. And the variable cost per batch is rupees 400. So in this way, if you will solve it, what will you get? Variable manufacturing variable cost. Right? This one, according to batches. All right. Then less we have the fixed cost. We have the fixed cost here. What is the fixed cost here? Rupees 112. This is the fixed cost. All right, let's do this. Solve it. Let's solve it. So I'll be using this and let's solve it. So the total sales, let's first find the total sales. Company is selling this much quantity at this price. Okay. This is the total sale of the company. This is the total sale. Okay. Next is right. So this is what? Manufacturing variable cost. All right. Okay. Now let's calculate the manufacturing variable cost as per batches, this value. So this is coming as what? 24 divided by 300 into 400, 320. Can you just check the calculation is correct or not and everything is fine or not? Okay, this value is 4,000 actually. So this will increase 10 here. Okay. Okay, so we have considered all the cost from here to here. Now let's consider the marketing cost and distribution cost, right? So give me 1 minute. So what is the marketing cost here? So marketing cost will be variable cost, right, per batch. Now let's see how many batches and how many batches we are doing the marketing and advertising distribution. So you will see in one batch there are 96 watches. All right, so total watch is 240. These are the total watch. And in one batch, they have 96 watch. So this will give you number of batches. All right, and the cost per batch is 24. You will multiply it here, 24. So you will get variable manufacturing cost. All right, you will get variable manufacturing cost. Next, after this, what do we have? Fixed cost. Less fixed manufacturing cost. Fixed manufacturing cost is 8 lakh. What else do we have? Distribution cost. Let's see the distribution cost. So this is what, this was your marketing cost. ठीक है, marketing variable cost and marketing fixed cost. Next is distribution cost. Less distribution variable cost. So what is distribution variable cost? 240 per unit is the distribution cost. Achha, now you have to see how many watches we are selling. Is it given somewhere? Okay, nothing is given, so we will assume 240. We will assume that we are selling 240 units. Okay, so variable cost per watch is 240 for the distribution. 240 into 240. Okay, this is the distribution cost, variable distribution cost. Then C less distribution cost per batch. Per batch. What is it? You will see how many batches do we have. This is the total quantity divided by, in one batch we have 96 unit. So this will give you number of batch into the cost per batch is 96. All right. The cost per batch is 96. If you will multiply, you will get the cost, distribution variable cost and distribution cost per batch. All right. Next is fixed cost. We have the last here, fixed cost. Less fixed cost. So what is the fixed cost here? We have 45 lakh. Right? So in this way, just consider all the costs you have. I have just, and yes, the last one is customer service cost per watch. 10 lakh. 10 rupees. So on one last one, less customer service cost. So we have 2,40,000 watches, on which 10 rupees per unit is the customer service cost. Yes, that's it. So what you have done, you have just considered all the cost here, right? You have done nothing. You have just considered all the costs, sale minus all the costs, right? All the variable costs, all the fixed costs, you have just considered them all. All right, you have just considered them all. You can see, we have just considered all the costs here. All right, just solve them and you will get the profit, right? You will get the profit here. All right, okay, let's do this. So if we will solve this, what value you will get? Can you tell me? Or give me 1 minute, let me calculate. $240 divided by 96, 24. So this is coming as 60,000. All right. Next, 240 Okay, I have done. Give me 1 minute. Let me see. Variable cost per watch. Okay. So this is coming as 576. Next is distribution cost. Give me 1 minute. I think there is some variable cost per watch. This is not a cost. All right. Okay. So you will see, what do we have here? If you will see, we have this cost, right? Give me 1 minute. So we have here variable cost, we have marketing variable cost. We will consider it. But per batch is given. So we have first calculated the batches, number of batches, we have multiplied it with the batch so that we can get the cost. And here what we have the total fixed cost. So we have just considered the total fixed cost. Now, if you will see in case of distribution, what do we have? They have given you that how many watches they are selling in a batch. So accordingly, we have calculated the marketing expenses, right? And variable cost per watch is given, not batch, right? So per watch variable cost is this, and we know how many units we are selling. We will multiply, we will get the distribution cost. Fixed cost is given, and this is also per watch is given, so we will multiply it with 2,40,000. Accordingly, just solve it, you will get the answer. All right, that's it. So this is how we will do it. You want, let's quickly come here and you can see they have just calculated it, right? Revenue minus research and development cost, manufacturing ka variable cost and fixed cost, and according to batches the cost, then marketing expenses ka batch cost and fixed cost, then distribution ka variable cost, fixed cost, and customer service cost. We have calculated, we have considered all these costs, right? It will give you the total cost, sale minus total cost, sale minus total cost will give you the profit. That's it. So in this question, this was completely a practical question, and they have just asked you to find the total profit here, right? So we have just calculated the total profit in this case, right? Such an easy question, right? If you will see in this, what is happening over the entire life cycle of the product, they have just asked you to find the profit. We have just calculated the profit here over the entire life of the product. Okay. Now there is a question. Okay, what is the question? Second part of the question is what? What percentage of the budgeted total product lifecycle cost will be incurred over the end of the research and development stage, research and development and designing stage. Always remember, here we have calculated the cost over the entire life of this product, right? So you can see this is the cost, right? You have calculated here the cost, and this is actually a cost, total cost. This is actually a cost over the entire life. This is actually the cost of the product over the entire life of the product. All right. Okay. So out of the entire life of the product, you can see what cost the company is incurring during the designing stage. So you can see this is designing stage, research and development and designing stage, right? This is the cost the company is incurring over the designing stage, and this is the total cost. And the question is that what is the percentage of the cost the company is incurring during the designing stage? All right, let's see what is the percentage here. So we have 80. This is the total cost we are incurring in research and development and designing stage, and the total cost is, this is the total cost, right? Find the percentage here. Okay, let me do one thing to make it simple. Okay, so we have 800 divided by 11656. This will give you. So here only 6.87 or 6% the company is incurring on research and development and designing stage. Yeah? You can see only 6.86% the company is incurring during the designing stage. So in this way, you can answer it. The question is what? What is the percentage the company is incurring during the designing stage? You can see such a simple question, right? Not at all difficult. Okay, third one is what? An analysis revealed that 75% of the budgeted total life cycle cost of a new product, new watch, will be logged in at research and development and designing stage. What are the implication of managing the cost of new product? It is mentioned here that over the entire life, whatever is the total cost, what was the total cost? Give me 1 minute. So the total cost was give me 1 minute. So this is the total cost the company is incurring, right? In the designing phase, the company's total cost is this, right? So the company's total cost is this in designing stage. What? 116,560. This is the total cost of the company during the designing stage. Now see what is written here, that out of the total cost, 75% of the cost the company will be committed initially during the designing stage. See, we have learned this in first class, that out of the total cost of the product life cycle, 80% of the cost will be committed during the designing stage. And for that reason, we should be very careful when we are designing the entire life cycle of the product. When you are in designing stage, the designing stage is the most crucial stage for the organization. All right. So this is a designing stage. So you can see, so what is the question? The logged in at research and development and designing, what is the implication for managing the cost of new watches? So, you know, when your initial stage is consuming most of the cost, you should be very careful, right? During the research and development and designing stage, right? You should be very careful. Read it. In analysis revealed that 75% of the total product life cycle of a new product will be logged during the initial stage, research and development and designing stage, right? While if you will see here, only 6.86% of the total cost is incurred. This implication is that it will be difficult to later reduce the cost once the design is finalized. Okay, so what is happening? Though it is mentioned that 75% of the cost the company will incur during the designing stage, but here you can see only 6.86 percentage you can see in designing stage, which is not good, right? That means the company is not tracing that most of the cost is actually incurring during the designing stage. So, which is not good for the company, and the company's cost will be logged, and later on they will realize, oh, most of the cost they have already incurred in designing stage. So later on, I mean, it will be difficult for them to take the decision and to rectify if there is any, if they want to reduce their cost, they want to reduce any non-valuated activities, they want to make any correction, it will be difficult for them to perform it later on. All right, so this is how we will do the question. Okay, do you have any doubt? If you people have any doubt, please ask your doubt in comment. Yes. Oh, okay, so do you have any doubt here? So you can see out of the total cost of the company, out of the total cost of the company is incurring most. Okay, let me repeat this. Let me repeat this because you are saying the screen was frozen. So you can see out of the total cost, this is the total cost of the company, right? Out of the total cost, the company here, they have mentioned that only 80% of the cost the company is incurring during the designing stage. They have incurred only 80% of the cost during the designing stage. है ना? So that means only 6.87 percentage they have incurred during the designing stage. But in the question, it is mentioned that 75% of the cost is, fixed during the designing stage, which is not visible for the person who is preparing all these cost sheet. It is not visible for them, right? The person who is preparing the cost sheet, he has just considered this cost in designing stage, but it is mentioned not just this cost, maybe this cost, maybe this cost, maybe this fixed cost. Generally fixed costs are fixed during the designing stage. Generally these costs are committed during the designing stage, right? So the person who has prepared this cost sheet, maybe he has not prepared it properly, and because of that he is just considering this value, and he is just saying that only 6.87 percentage cost they are incurring during the designing stage. But actually it is mentioned in the question that the company is incurring 75% of their cost during the designing stage, right? So maybe the person who has taken the decision of finding the cost of designing stage or research initial introduction stage, he has not done it properly. So what will happen? Obviously, the decision will give a adverse result for a reason, because generally what happened, we should first identify. See, always remember, during the introduction stage, the company will incur most of their cost. So it is mentioned the company is incurring 75% of the cost. That will be true. But the point is that the person who is preparing the cost sheet, he didn't find that actually the fixed cost, maybe the fixed cost which he has considered here is actually the cost of designing stage. The cost they are actually committing, these are the commitment, their commitment during designing, that okay, we will produce the goods using these plant and machinery. Now plant and machinery is a part of design of your production process. You are committing, okay, this will be the distribution channel, so the fixed cost you are incurring during the distribution is committed cost during the production life cycle. So committed means ki no matter what will happen in future, but you have to pay these expenses during the entire life cycle. Generally, if you will observe, the fixed costs are actually committed cost, right? And you will see over the entire life cycle's total cost, generally these fixed costs, right? These fixed costs are, once you will buy the machine, you will use it for 12 years. Once you created a distribution network, you purchase the vehicles, fleet, trucks, you will use it for next 15 years, 12 to 15 years. Point is that when we are buying the fixed asset for the production over the entire life cycle of the product, these are commitment. for over the life cycle. These are the commitment. So now if you purchase this is a commitment during the introduction stage. So the person who has prepared and taking the decision, he has not taken it properly, right? And he is saying that we have just this cost in introduction stage. He has not done it properly, right? So which lead to a problem. Why? Because when you are deciding your introduction cost, you can identify, you can do the value engineering. We have learned about the value engineering, that in introduction stage we will see what are the costs we are incurring. So he should not just consider this cost, he should consider the fixed cost and the fixed cost, right? And the fixed cost, he will actually, he should see what is the actual commitment during the introduction stage. And then when you know your initial commitment, you can identify the non-valuated activity in it. So when you are designing the process, designing the entire machines, how you will arrange the machine for the production, how you will use the vehicles, how you will use all these things during the commitment, when you are committing all these things, at that stage, you should identify the non-valuated activities. During the commitment, you should identify the non-valuated activities. So the point is that the person who is taking decision, he is not properly informed, right? For that reason, he avoided some, committed fixed cost. And for that reason, when he don't know actually the committed fixed cost during the introduction stage, obviously, it will be difficult for such person to identify any non-valuated activity or waste. All right. I hope it is all clear. I'm so sorry the screen was freezed. I don't know what you missed. If you want, I can repeat anything you want me to repeat again. Yes. I'm so sorry. The screen was frozen. Yes, I just saw. So the point is that when I read your doubts, when I read your questions in my screen, I have to freeze the screen. Take it to read your doubts. So. Okay, so now tell me, is there any doubt? Do you want me to repeat something again? I'll help you again in case if you miss something. If you have any doubt in your mind, please ask me your doubt. If you have any doubt in your mind, if you want to ask something, you can ask your doubts. Yes, any question in your mind? Okay, what we will do now after this, in next session, what we will do environment management accounting is the topic which we will cover in next session. I'll take more questions. See, you can see life cycle costing. We have more question on life cycle costing. I'll take it in next session. And you can see we have more question on Pareto analysis also. We will take it in next session. Value engineering, we will take more question in next session. So because in next session, I'll have to cover only one topic, that is environmental management accounting. That will hardly take 1 hour. After that, we have 2 hours to practice as much as possible. All right. Okay. So with that, let me wind up the session. Thank you so much. Take care. Bye-bye.